Welcome to my channel. I'm Dr. Romano. Today's video, we are going to be discussing the update of the stock market for the month of April of 2023. But before we continue the video, please remember to subscribe to my channel. Do thumbs up. It's right there. It doesn't hurt to press that button, but it will really help me out a lot. As you know, what happened in March of 2023, the stock market did go down. It took a bit of a dip, but sometimes when the government comes out and says certain things, it kind of pulls back and it doesn't allow it to happen so much. I've mentioned this in the beginning of the year in a video that I will add to the bottom of this video in the description area, and I mentioned that in the first quarter of 2023, at the end of the first quarter, between the first and second quarter, which is March and April of this year, the stock market would take a bit of a dip and gold prices would spike. Well, if you noticed last month in March, gold prices have been spiking and the stock market did drop. Now, that drop that we experienced in the SPX, the Dow Jones, etc., the indices, you are going to see a bigger drop than you've seen in March. So April will be an even bigger drop than March. And as you've seen, gold prices are spiking. They're past 2,000, which is very bad for our markets because there's an inverse relationship between the commodities market and the stock market. You could read all about this or listen about this in my wealth management videos. I talk about how to take advantage of the different markets in the market cycle based on market timing. For those of you who don't believe in market timing, you could just write down what my video has to offer. The market timing videos, there's 3 of them, and you could basically trade based on that information. You could invest in real estate at certain times. You can invest in the stock market. You don't have to be a professional trader at certain times. You could also invest in the commodities market at certain times. And so you have to say to yourself, where are we on the market cycle? Well, based on my theory, you should have already sold your real estate. You are not going to see anything higher for the next 5 years. And I tell you this because interest rates will stay high because the treasury market is in big trouble. And that's why our government had to vote and pass that bill to state that they'll be the buyer of last resort, like they've done in the past for the banking system. Well, when you have other countries pulling out of the treasury market, well, there's a gap. Where does that gap come in? That's the US government purchasing those treasuries. And you have to keep interest rates very high to entice other investors to come in and buy. So if you have the entire US investing in savings bonds and earning 5, 6, 7% interest, well, of course they're all going to buy savings bonds if they can't invest in the real estate market because it's not going to go up. Now, of course, the real estate market will take a dive. It's slowly happening, but it's not happening as we expect because it takes time. The markets have to digest as to what's actually happening. Secondly, in certain cities, you have a lot of people still moving there from other states, but that's not going to last forever. So there's going to be a vacuum effect because sometimes people who are from the East Coast and they move out to middle of America, they may not coincide, they may not get along with the people on the West Coast or the middle of America. So you'll find a time period where they'll move away and go back to where they're from. This is a big problem because every time there is a stock market collapse, vacation properties do really bad. They go down more than 50%. And so if you bought your vacation property in Colorado, let's say Vail or Aspen, no, not Aspen, in Vail, Colorado, or Beaver Creek or Breckenridge, well, you're going to experience even more than 50% drop in the value of your property up there. and real estate brokers are not making money, so they're leaving up there. Well, what about in resort villages, let's say in Florida or other places like Arizona, etc.? Those properties will definitely drop more than 50%, because if you have high interest rates, the government is not going to lower interest rates to zero like they did the last time in the 08 and 09 era to help the markets. So the real estate's going to drop 50% or more, and it's going to stay low because of the treasury market, and interest rates have to stay higher. So we're talking about, I would say, in a 2-year period, the next 2 years, you're going to see finally the real estate markets are going to react to what's happening. And then, of course, people run out of their savings. They can't pay their second properties or third properties, the mortgages and the taxes. So they actually have to take a loss. Right now, people are either trying to sell their house, or they're pulling back and taking their property off the market because they realize they're not going to make a profit. Based on the taxes, everything, the maintenance, there's no profit now. But other states, the real estate didn't go up. And if you research what states that the real estate really didn't go up, you have a market there to invest. I'm not going to tell you that. I've done my research. Now, of course, the stock market reacts to the interest rates in a really big way, because when you have high interest rates, it costs more for traders to borrow capital to trade with, meaning to leverage themselves so that they could make more money. Now, this is also another problem, because if interest rates do go up to 10 or 12%, and that's what I'm predicting, more than that, because in the 80s, the 70s and 80s time era, that change in the decade, interest rates were through the roof. The government had to deal with an issue that was coming about, so they had to help the markets. And in that time period, interest rates were actually beneficial because it allowed people to save money and to put away money. Of course, they lowered interest rates in the late 1990s to create a real estate market boom. That's the only reason why that was created. Now, you also have to remember, with the value of the dollar, there's countries out there, as you know, that they're trying to threaten the dollar. I believe the most beneficial thing that can happen is that the US does not stay the reserve currency, because think about what happens. So my prediction is also in the fall time of 2023. I'm not telling you exactly when, because it's too soon. There'll be another dip in the financial markets. Particularly, you could invest in the indices, so to speak. It's a big problem when you analyze Walmart closing down stores, and Target, and all these basic retailers. Those are not high-end luxury goods. Those are companies that supply America with the products that we need. And to say to yourself, they're downsizing, well, I guess the average American is also downsizing now. And you're going to see that affect the real estate markets. As people realize, well, we're at the top of the real estate market, is it a good idea to buy real estate now? No. Interest rates are through the roof. You have to come up with more of a down payment to make sure that your payment isn't 2 weeks' paycheck. It should be no more than 1 week's paycheck. So you afford less, and that really affects the markets. Of course, right now is actually a good time to build a house, because of the price of lumber is very inexpensive. Of course, cement is very high because we have factories being built and infrastructure being updated in the US, but the foundation doesn't cost so much compared to what the house costs. So you'll still save 10 to 20% to build your house yourself. And if the property is a little too high, don't worry about it. The house will become more in the future. I want to thank you so much for watching my video. Please remember to subscribe to my channel. That will really help me out. And do thumbs up. It will really help me out as well. Thank you so much.